Here to help explain what's behind the numbers is Caleb Silver, editor-in-chief of Investopedia. Okay, wow, that Dow. All three exchanges set records yesterday and continued setting records today. What's driving this?
Yeah, more bulls than a Garth Brooks concert right now. The 20th all-time high so far this year. We're not even into April yet. We're on pace to have the most all-time highs in a year if we keep this going. So what's driving it? Well, corporate profits are better, right? The Federal Reserve has signaled that they will lower interest rates, and the stock market is way ahead of that. Remember, the stock market and the economy, not the same thing.
No.
But the stock market anticipates the economy, and it's anticipating lower rates. Lower rates is octane for the stock market.
Is this the new normal of 40,000 or near 40,000 or at least high 30s, Dow?
Yeah, it's the law of large numbers. As these numbers get bigger, any moves higher just takes us into these bigger and bigger numbers. And there's a lot of money now chasing this type of risk. Remember, in the past couple of years, last year was a bull market. It started in October of 2022, but a lot of people were resistant to putting money in the market. They felt burned by what had happened the prior year when we had that bear market.
Right.
And they were putting their money in CDs, putting their money in high-yield savings accounts, 4%, 5%. That sounds great, but when you look at the stock market now up about 70% since pre-COVID, that's why we stay invested. Then they say, oh, maybe I should be chasing these stocks. You don't sell, you stay invested.
I know, I'm killing myself about this. All right, more than half Americans have money in the stock market, so it's good for them. But before you get too excited about all of America doing better, only like, what, 1%, the 1% of the richest people have most of that money.
That's
so
right.
It's not a lot.
It's concentrated at the top, and the shareholder class has done wonderfully, not just in the past few years, but in the past 20 years, right, with these low interest rates. But also homeowners have done well because home prices have gone up. And 40% of homeowners have no mortgage. They've just seen a rise in the value of their home, probably their biggest asset, and a rise in their 401ks. So the shareholder class, the homeowner class, the top 10% of the country doing great here, and the people that own maybe just a few stocks or maybe they have a low 401k, they're not doing as well, and the renters have watched that rent inflation over the past few years. It's made home affordability the lowest since the 1970s.
So home sales did rise for a second month in a row in February. They jumped 9.5%. It was higher than expected, but still lower than usual. We're still trying to undo the damage here, right?
That's right. So the home market has been in a deep freeze as we've had these really high interest rates, the highest in 20-plus years, but we're starting to see a crack in that, right? So you started to see mortgage rates, the 30-year fix, which is the most popular lending product, come down to about 6.8, 6.7%. As that gets closer to 6% and 5%, you're going to see the housing market have a lot of activity this spring and summer, which is good for sellers that haven't wanted to sell because they don't want to get out and get a new mortgage at 7 or 8%.
Or sell at a loss.
Right. Or it's good for home buyers who've been trying to get into this market and have just not been able to afford that monthly mortgage payment, plus the down payment, plus rising home costs. We're going to see that unfreeze this spring, and that should be good for the economy, too.
So why are first-time home buyers still having such a hard time?
Yeah, the median price of a home is upwards of $400,000 right now, and if you got to put 20% down, if you have great credit, and then deal with that monthly mortgage cost, that home ownership rate, the cost of owning a home is above 30% of people's income, and that's too much for some people, especially when you think about inflation in food, inflation in insurance, inflation everywhere you look, plus home and insurance. It's very hard for first-time home buyers.
All right, so we've got unemployment at this, near record low rates here. We've got the stock market at record highs. We've got inflation heading downward. We've got the Fed promising rate cuts. Why are we seeing Americans dipping into their retirement accounts or their 401ks to get emergency cash?
Yeah, we've seen a rise in people tapping their 401ks. You can do it now. There is a hardship provision that the Biden administration has allowed for some people to dip into their 401ks. We love to spend, so a lot of people just can't stop spending and are doing it for that reason. But a lot of people are having a hard time making ends meet because of inflation. Now, while there's been salary increases, wages are up 4% year over year or so, that doesn't really match up with inflation if you're making the median income about $78,000. A 4% raise is not helping you on those monthly bills as much. So people are taking hardship loans, they're going into their 401ks, they're taking personal loans, credit card debt is at a record high right now. A tale of two countries, the shareholders and the homeowners versus the folks that are just trying to get by week after week.
Yeah, I keep wondering, given all these signs, given all these stock market records, why so many Americans say that they don't feel good about the economy.
Yeah, because maybe they've overspent, but a lot of people have just not been able to keep up with the rising cost of just about everything. Think about education,
Right.
think about medical debt, think about all the things we have to pay for. And now gas prices going up again right now as we head into the spring and summer. That's going to put a pinch on a lot of people's pocketbooks right now. So a lot of people just have not been able to make ends meet, and things have just gotten more expensive. But if you're a shareholder, if you own your home, if you have a high-paying job, this is a very good time to be you.
Thanks so much for watching. Go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.